Bill Ackman, a man who has remained relatively quiet in 2021 following a very outspoken and controversial 2020. This is a man who profited billions betting that the pandemic would have a severe impact on stock prices. This controversial decision to short an incoming economic disaster led to his firm achieving a net return of 70.2%. This kind of performance has raised eyebrows, and many are calling Bill the next Warren Buffett. This year, however, we received little insight from Bill and his team on what they think of the economy and the stock market going forward following some unprecedented changes. But finally, after 5 months of near silence, Bill Ackman has spoken. In this video, I summarize his 30-minute interview with the Wall Street Journal, going over some of his more interesting takes on today's economy, starting with the big one, inflation and how bad it's really going to get.
Sure. So I do agree. I think there's going to be inflation. I mean, you don't say there's going to be. There is inflation. It's happening. There's wage.
Is that a debate between like business people who are experiencing rising prices and addressing it versus economists who are saying, oh, this is just temporary blips coming out of the pandemic? I mean, where do you come down on that?
Yeah, I think it's not temporary. First of all, it's hard to roll back wages once you roll them up. I mean, right. You go from 15 to 12. So I would say we have a new baseline in terms of wages, sort of generally. You look at every commodity price, right? Copper, lumber, make your list. Look at what's going on in energy even before the colonial, pipeline issue. Look at housing prices. Look at Bitcoin, right? Everything is inflating, and that's driven by. We have kind of a once in a moment in history. Right, you have people emerging from a pandemic with the animal spirits that come from being locked in their homes, right? So that's dramatic. You have all of that hit. The vaccine rollout is actually in the U.S. certainly has been, fantastic. So you have a lot of people feeling, being fully vaccinated, going back to their lives, and then you have the Trump stimulus, the Biden stimulus, infrastructure, an extremely accommodative, Federal Reserve.
So there you have Bill directly stating that he disagrees with the Federal Reserve, saying that he does not believe the inflation we are seeing is transitory. This matches the opinion from what we have seen from other business people and most famously, Warren Buffett. While others have outright denied that inflation is even taking place, Bill is very direct with his statement and goes as far as saying that the price pressures we are seeing in the crypto markets are related to the overall inflation spike. The word transitory has sort of become a meme on financial Twitter and YouTube at this point. The problem with temporary price raises is that they're never temporary. If you raise wages from $12 to $15, as Bill was saying, it's almost impossible to bring those wages back down. The same goes with prices. Temporary inflation is a laughable term as pricing hikes are extremely difficult to erase. This leads us to interest rates, a topic that heavily influences inflation. Ackman is asked about potential rate hikes and how they will affect the stock market going forward. His answer may surprise you. Take a listen.
A couple of quarters. So that
is the Federal Reserve too accommodative, do you think?
I think they're going to have to raise rates for sure. And I think, they adjusted their policy, in my view, just at the wrong time. A preemptive policy toward inflation, I think, is a better approach, particularly in a world where we have, massive stimulus, economic stimulus.
Is it too much stimulus? I mean,
I think with rates where they are, there's a very good risk of the economy overheating, which is why I think rates go up. And really the answer to the question that your viewer asked is you want to own businesses that have pricing power, and you want to own businesses where the value of the business is not going to change dramatically if rates go up.
As you can see, Bill is surprisingly very direct in stating that he believes the Federal Reserve will need to raise rates to calm the situation. And if we take a look back in 2018, the last time the Fed tried to do exactly this, the situation didn't go very well. Now Jerome Powell is stuck between a rock and a hard place. Raise the rates and the stock market will undoubtedly crash. Leave things as they are and inflation will run rampant. Which way they decide to go is hard to predict because this massive decision is in and around with geopolitics, lobbying groups, politicians, and academics. If Ackman is right and the Fed raises rates, you can bet those high-flying, non-profitable tech stocks are going to crash pretty severely. We have already seen the tech sell-off, and managers have begun to move money into what YouTube likes to call boomer stocks. And this is likely anticipation that the Fed will have to raise rates. Even Ackman's own company, Perishing Square Capital Management, has aligned themselves for this scenario. Looking over their holdings, they have around 9 positions, all in companies with real assets and respectable earnings, businesses that he believes will do well even during times of high inflation or higher rates. One of those 9 is Howard Hughes, a landowner and developer of master planned communities. The recent surge in housing prices prompted the following question, one that you need to listen to if you believe that we're in a housing bubble.
And you want to own businesses that can raise prices to make up for their incremental input costs, whether that's labor or lumber.
Okay, thanks. So, and you're also exposed to the housing market, which, as you're saying, that's also seeming on fire. I mean, what's your outlook there for the housing?
I think we've gotten to a point where the millennials can afford to buy a home. We do have very, very low interest rates. And I think people, after being stuck in a small apartment, the notion of actually having your own space and having a lawn has become a lot more appealing. And I think you're seeing that in housing. We own a company called Howard Hughes Corporation that owns these sort of small cities. We call them master planned communities. And we've seen enormous, the company just announced earnings yesterday, dramatic increases in everything from condo sales in Hawaii to lot sales. And even the New York City real estate market is starting to boom again, which is interesting.
Bill is clear that the housing market is on fire, and if you observe his other statements, he believes that it's a business that can and will raise prices to keep up with inflation. We have seen over the last couple of months as lumber costs have skyrocketed, the final price of a new home is going up, yet consumers are showing no signs of slowing down buying. This is a rather bullish sign that housing will likely continue to increase from the perspective of Ackman, especially in those areas like Texas and Las Vegas. Warm weather and low taxes attract companies, and companies attract talent. If you can combine everything Bill has stated here about inflation and look at his portfolio, you can quickly see that he's setting up for a rate hike, one that will likely damage those high-flying tech stocks with no earnings to show for their prices. The Cathie Wood portfolio is in danger, according to this line of thinking, and the old guard, the stable boomer stocks, are back in business. Rate hikes will undoubtedly shake up the entire economy, but how long Jerome Powell has before this summer gets superheated is the question of the year. Whoever can predict the timing of the next rate hike will make significant returns. In the meantime, managers like Ackman are preparing for the all-weather scenario, reducing their risk and maximizing their potential future returns with portfolios filled with real businesses, with real assets, and real profits. Thank you guys for watching, and as always, please make sure you hit that subscribe button if you want to enjoy more content like this.